Hey everyone, Couch Investor back to another video for today. So remember, before the split, I made a video about should you buy Amazon before the split, explain what a split is, why it doesn't really change anything fundamentally. But even though it doesn't change anything fundamentally, we always see a rise in stock price. Now with Amazon, we saw the same thing. It went from around $2,000 to over $2,300. Now the split happened and we're right back where the price was before the split. So if you want to trade the split's announcement, we'll probably see the same thing with Google, Alphabet, and with Shopify, and then Tesla as well eventually when we get a date on that one. But fundamentally, nothing changes. Now with Amazon, I'm an Amazon holder, been holding it since the end of 2018 when you had that trade war scenario and the market went down. The stock really hasn't moved that much since 2019. If you look at the graph, it hasn't moved much at all. But the company, again, if I buy Amazon shares today, it's purely because of AWS, because retail, and that's the big red flag, let's say, of this video. The one reason not to buy Amazon just because it's split is because of retail right now. So we're going to have a look at that. But before, if you want to support this channel, do check out the links in the description and in the pinned comment to get the top 10 best stocks to buy right now, or go to fool.com/couchinvestor. Also check out the other links out there. Most of them are free and could be very, very useful for your investing journey. Now let's have a look at the first topic here. So first thing we had last week was that Amazon consumer chief Dave Clark is leaving the company to join Flexport as its new CEO. That will happen effectively September 1st. Now this is Dave Clark. He basically built Amazon's warehouse network from only a few facilities to a massive footprint touching almost every corner of the United States. Now yes, did a great job before, but then the pandemic came and, well, they just overdid it, right? The retail segment for Amazon, as we've seen in past videos, we're going to see at the end of this video as well, it just doesn't make any sense anymore. Point number one, Amazon shedding warehouse space as sales slow. Excess space is adding about $10 billion to cost in first half of 2022. How did that happen? Well, Amazon rushed to add capacity that is now proving to be excess amid slowing sales. And it is one of the main reasons, I believe, why they started to offer buy with Prime to stores outside of the Amazon ecosystem, let's say, or outside the Amazon platform, which is a great idea, right? Buy with Prime, having that option on your website will probably drive a lot of sales and will expand Amazon's footprint, let's say. But again, here they expanded too much, just like other companies. They hired too many people, they expanded too quickly because they thought, well, the pandemic would last forever and ever, which was not the case. So basically the key takeaways of this article is Amazon reportedly is looking to shed at least 10 million square feet of excess warehouse space and perhaps as much as 30 million. The company apparently overexpanded during the surge of online shopping around the peak of COVID-19 pandemic. Makes sense, right? We were forced to stay at home, so obviously I would buy stuff from Amazon. Amazon estimates that excess space will add about $10 billion in cost in the first half of 2022, which we're still in. So next quarter, one of the main reasons the title of this video is one reason not to buy Amazon after the split is because we're still in the first half of 2022. More than its projected operating income. And last thing, Amazon reportedly will seek to terminate some leases early and sublet other warehouses. So yeah, maybe Dave Clark leaving is not such a bad idea. And then there is this topic right here, which I took from a tweet from James Bultart. If you want to follow him, he's very, very insightful. He also has a Substack. Do follow him on Twitter. So this comes from a research note from Morgan Stanley, I believe. So this is about the fuel costs that Amazon will have. So they projected 2022 and 2023, but let's take that number from 2021, right? $3.29 diesel cost per gallon. Now we know that today it's much higher, it's over $5 or so. So this number right here, $3.96 for 2022 doesn't make sense. Even for 2023, it's not correct right now because we're already higher than that. And maybe we'll go even higher this year. We don't know. So the updated fuel cost, you can add certainly another $10 billion to that, if not more, right? And this is another huge hit for the retail business, and not just for Amazon, by the way, right? For every other e-commerce players out there, because you obviously have to ship it. So shipping costs will rise and are already rising. Maybe we will see less free shipping, who knows? For Amazon, it just doesn't make sense anymore to ship one thing for free in a huge box. I don't know how efficient that is, but it just doesn't make sense. Now, obviously there is Amazon Prime, and that's one way for them to recoup the money. But again, even with 150 million subscribers or something, and yes, with the price going up a little bit, it just doesn't cover the costs. And actually, with regards to Amazon Prime, we have some, let's say, semi-scandal here with Whole Foods shoppers that are suing Amazon in a class action suit. The main reason why is because, well, they'll have to pay an additional $10 service fee on all grocery deliveries moving forward. And that's for Prime members, right? Prime members are already paying for a service to get free delivery, and now, well, you have to pay an additional $10 service fee. Before that, Amazon had offered free grocery deliveries on order of $35 or more as a perk for Whole Foods shoppers with Prime subscription. And now that that's not the case anymore, well, obviously people aren't happy, and maybe a lot of people might cancel their subscription because, well, if you are shopping a lot, if you're buying a lot of food for your family, and usually shipping is free, then obviously it is saving you some money. That's why you pay for Prime membership, free shipping for Whole Foods, for Amazon, you get Prime Video and all the other perks as well. Why would you stay there if you have to pay anyways that additional service fee? Just doesn't make sense. And to be honest, I don't really know who at Amazon thought this was a great idea, right? It just doesn't make sense. So another bad thing here, that all comes down to that one main reason not to buy Amazon after the split just because it's split. And now before I go and show you the numbers again, obviously Amazon also has that big investment in Rivian, which again, the stock has been taking a hit time after time. We already saw that in the last quarter. Now, yes, it's not really a hit that shows that the business itself isn't doing well. It's just an accounting thing. But again, this is something you have to take into consideration, right? The first quarter that they had that Rivian investment was a huge positive because Rivian was over $140 or maybe even more. So that was positive for Amazon. But since then, it's gone down, 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 which is a negative for them. Same thing with Bitcoin impairments. You have to report that. Now, with Rivian, they also have that order of 100,000 electric vans. Now, imagine if they had those electric vans today already, fuel cost would be much, much lower. But that's not the case. Unfortunately, Rivian will probably deliver those vehicles in a long, long time. They'll probably have delays, just like every other company out there. So there is that. Now, quick reminder, let's have a look at last quarter. And again, why I'm not selling any share of Amazon. But currently, I don't really see why I should buy, especially not just because the stock split. So as mentioned in the past videos, the big pluses here are the advertising services, which grew 23% and is still bigger than YouTube, still bigger than Netflix. And then AWS, which has grown 37%, has insane margins, is now at $18.4 billion, growing extremely fast. I don't really see one reason not to buy Amazon at these prices because of those two segments right here. So online stores, it decreased 3% year over year. But again, I want to show you why it's pretty bullish to look at Amazon's business today and look at advertising services and AWS. In this case, for example, leave out everything else, right? Online stores, $51.12 billion. And we had advertising services at $7.8 billion. Now, I'm not even going to look last year Q1. I'm going to look at the big quarter, which was Q4 2022, $66.45 billion online stores. But the advertising side is still lower than this quarter. which tells you a lot about the advertising services segment, continues to grow, continues to be extremely lucrative for the business. And again, remember, these are high margins segments. Online stores, physical stores, not that much. And in the future, the faster growing segments here, in my opinion, will overtake the slower growing one, and that's when the stock will start to flip. But in the meantime, that's not the case. The stock, purely on the technical side, let's say, is broken, right? I don't really see any light at the end of the tunnel, especially not when it comes to retail e-commerce. AWS will still crush it, right? And that's maybe why every Amazon holder that I know is probably thinking maybe they should just spin off AWS and then we'll all be happy, which in my opinion would be a great idea. If they spin off AWS, would buy it in a second. But unfortunately right now that's not the case. Maybe even fortunately that's not the case, because without AWS, Amazon would have been in huge troubles. Now they use that cash from AWS to put the other segments on live support, which is something that other companies out there cannot afford to do. So eventually, when you think of it, Amazon might come out even stronger out of the current situation because they have the luxury of having all these other segments out there that have higher margins. I don't know, Target doesn't have an AWS, for example. Makes you think, right? So overall, those are my thoughts right now. Still holding Amazon, don't count on selling one single share, because I do think that in the long term, it will be much bigger and will go back much higher. Now do share your thoughts in the comments below, especially do share your thoughts on stocks that have stock splits. And do you trade it? Do you not trade it? Share your thoughts down in the comments below. Do check out the links in the description. Join the contest on stockr.io. It's free to enter. You get a chance to win $250. So why not? Again, if you like this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And I'll see you all in the next video. Bye bye.